Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is July 11th, 2023, and we are going to have a different format, not just looking at gold or silver in isolation, but a true comparison, gold versus not only the juggernaut, the U.S. bond market, but the longest running stock market average that we have in the United States, the Dow Jones Industrial Average. So this is going to be a battle royale. We're going to pit these asset classes against one another and see who's winning, who has the chance of winning here over the coming years. All this is coming to you in this update. I want to let you know, after this broadcast, I'm not going to publish for a few weeks here on YouTube because I am opening a special limited time offer for 2 weeks of access to our premium subscription for only $1. This normally sells for $800 per year. You can get access to everything we have ever published, all of the recent videos, all of our gold and silver mining picks, all of the analysis on the stock market, Bitcoin, and other commodities for 2 weeks for just $1. Use the link below in the description to sign up. No gimmicks, no games. Of course, I would love to have you stay on for the full year, but if you just want to do the 2 weeks for $1, that's no problem at all. Just cancel before the end of the 2 weeks. No questions asked. Trust me, I don't care about the $1. It's just the credit card companies make us do the $1 charge to get you in the system. So make sure to take advantage of that. Check the description below. And let us do this comparison between gold and these two heavyweight asset classes to have a real sense of what is going on here. So, battle number one, gold versus U.S. bonds. We're going to look at long-term U.S. bonds. This is the 30-year bond market. This is representative of long-duration debt that the U.S. government issues to try to finance its operations. Now, this one is looking very good for gold. Let's talk about this. So we're going back pretty much into the freely traded era here. And notice that any time that the ratio between gold and U.S. bonds got into this zone between 14 to 15, remember, this is just an index. It's just the price of one asset divided by another. Anytime that ratio got up to this zone around 14 to 15, you can see that it represented a major top in gold and or a major bottom in bonds. So think about this one right up here. This was the peak in 1980, and we know that after 1980, gold declined for 20 years after that. So you can see that expressed in the ratio here. Gold declined all the way to 1999, 2001, the double bottom. It was a 20-year bear market. So it's important that we pay attention to any time gold is in this zone versus U.S. bonds to try to understand, could this be a long-term top in the gold market? Fast forward 31 years. So look, gold declined for 20 years. Then we had the bull market in gold leading up to 2011. Notice, gold peaked right in this same zone, this multi-decade resistance zone, quite similar to the top here in 1980. This was telling us that this was a significant top in the gold market in 2011. Now, the second time, it was not as significant as the first time. What did we have? A 5-year bear market. Gold fell from 1,920 down to 1,045, almost a 45% decline in the price of gold over 5 years. Still a significant top. So it was important to pay attention to this signal here. Fast forward 10 more years. We get into early 2022. This spike in here, when did this occur? This was on the invasion of Ukraine by Russia. Aha. Something very different has happened here, though, since this spike. Notice that this only represented an interim peak in gold. From this top in gold, gold declined by about $400 after that. But notice here that the ratio did not fall all the way back to where it was versus U.S. bonds, either at the 2015 bottom and certainly not all the way down to where it was in the late 90s, early 2000s. So something dramatic is actually occurring here when we look at gold versus long-term U.S. bonds, which is that it is breaking upward. This ratio is breaking into a new paradigm. Major pause, stop, think about this with me for 1 second. What does this mean? In all of available trading history, I'm not cherry picking data here. We only have freely traded gold price action going back to 1971, and gold was slowly building its way higher up to the peak in 1980. So we're looking at everything available for gold versus U.S. bonds, functionally speaking. Never before in the history of mankind has gold been able to break through this multi-decade resistance zone, except that it is doing that right now. It is doing that right now as we were speaking. It is breaking into a new paradigm versus U.S. 30-year bonds. Remember, this is battle number one. So what is happening here right now, when we're talking about gold versus bonds, we're talking about gold, real asset, versus bonds, a fiat asset, a government-issued asset, a piece of paper that actually has no intrinsic value other than that the government says that it is going to have value. So what's happening here, this is what's confusing for some people to understand when they're first approaching the precious metals market. What is happening here indeed, as we are speaking right now, I mean literally this is happening in front of our eyes, is that gold is breaking into this new paradigm versus fiat assets. Real assets versus fiat assets. Now, we have a way to measure the ultimate target that this ratio should reach. And we do that by measuring the widest part of this 40-year consolidation, 12.5 points. And we add that level onto the breakout point at 15 on the ratio, yielding a target of 27.5. Remember, this is just a ratio between these two real asset classes. But you can see the data right here. So, at the current level of 15.6, this is nowhere near where it's going to go over the remainder of this decade. There's going to be a significant further move into gold and or a significant further move out of U.S. bonds. That is the message of this chart. So, of course, when we're talking about going out of U.S. bonds, we're talking about interest rates rising. So what it means is either gold is going to rise, bonds are going to fall, in other words, interest rates are going to rise, or if they're both going to fall, gold is going to fall less than U.S. bonds, or if they're both going to rise, gold is going to rise more than U.S. bonds. Those are the ways that this ratio can break into the new paradigm. The bottom line is that it's going to be real assets, gold, outperforming fiat assets throughout the next decade, perhaps even getting into the 2030s, okay? So, this battle, number one, looks very good for gold. Aha. Now we go to battle number two. Okay, so here is the hard part for a lot of precious metals investors to grasp, is that victory that gold is seeing versus the fiat bond market, that is not the only battle happening at once. It's like that is happening in one corner of the world, and in a completely separate corner, gold is facing battle number two, which is against the Dow Jones Industrial Average, or more broadly speaking, world stock markets. And so let's think about what we're talking about here. We're talking about industrial stocks, yes, but the Dow Jones is more widely representative of the total human capacity for technology, innovation, and growth. And so, trust me, I am a precious metals investor, and I understand the problems with fiat currency and central banking. And I do think that the central banks should be abolished, and that we should go back to a sound currency. However, this battle that's happening over here has nothing to do with that. This is happening in a completely different realm. Let's look at the pattern first, then we'll talk about what is going to happen here with gold versus the Dow. So the major pattern is this. I've highlighted it for you. It's between this rising support. Remember, the higher that this goes, it means the more that the Dow is outperforming gold. And the lower that this goes means that gold is outperforming the Dow. So what we have here is this pattern called a pennant triangle. It's this converging pennant shape into a triangle. And you can see that the triangle has an apex point here in 2027. And notice that this pattern is just going from very wide swings to lesser swings and now even lesser swings. So it's converging here in 2027. However, I will tell you from studying these patterns over the last 15 years, these patterns do not wait until the very end of their timelines in order to break out strongly in one direction or the other. They typically do so a couple years before the final apex point. So we are in that window now. Now and over the next 12 to 24 months, we are in the window where this ratio should be breaking either upward in favor of stocks or downward in favor of gold. Let's look at the absolute figures. We're looking at 19.2 on the ratio to seal the deal in favor of the Dow Jones, and we're looking at 13.3 on the lower side to seal the deal in favor of gold. And this is trading right now at 17.46. So it's right in the middle, but it's getting ready to bump up again on the side of the Dow Jones Industrial Average. Now, before you go any further and you just say, well, this is the same battle as the other battle, here's where I really disagree with you. And here's where I've had to take a step back myself as an investor over this last year and refresh my perspective on some of the incredible things that are happening around the world. Because remember, this Dow Jones Industrial Average is reflective of us as a species. This is reflective of you, I, and our neighbors, all the good things that we are capable of, and all the bad things that we are capable of. It's all of that together. But as a net sum, what I'm arguing here is that we are improving in our capacity for growth, for experience, for travel. We are improving in our capacity over time. I mean, you look at a couple examples. For example, did you know that 30 years ago, just 30 years ago, as a species, the top scientists in the field of astronomy did not know that there was a single exoplanet. An exoplanet is simply a planet outside of the solar system. We did not know as a species that there was a single exoplanet in existence anywhere outside of our solar system. Just 30 years ago. Just back here in the early 1990s on this chart. Fast forward 30 years, and we as a species have now identified over 5,000 exoplanets in the visible Milky Way galaxy. So, this is a major leap, if you think about it, as far as our understanding collectively of our place in the solar system, in the galaxy, in the universe. This is growth. Think about another example. Elon Musk is within plus or minus 10 years of attempting to send human beings to Mars. And so we are going to be, it appears, we are going to be a multi-planetary species within our lifetimes, God willing. Elon Musk left his home country of South Africa and came where? He came to the United States to found his enterprises. He did not go to Australia. He did not go to New Zealand. He did not go to China. He did not go to Europe. He came to the United States to undertake these endeavors. This is significant. Within the next 50 years or so, we should have the capacity to land craft on asteroids and exoplanets. And can we imagine what the benefit will be for mankind if we're able to harvest minerals from some of these bodies to bring them back to Earth, or potentially even learn about new minerals that do not even exist here. Let's talk about a completely different realm. Just 20 years ago, you and I could not be sitting here having this conversation with a multimedia presentation able to be watched in real time, where we can communicate and convey ideas back and forth. This was not possible. Yes, the internet existed, but the bandwidth was not there. YouTube didn't even exist 20 years ago, let alone the ability to post videos in high definition and have the ability to communicate. So the very fact that we are exchanging ideas here and that we have at our fingertips the sum of human knowledge available to us, including this video, is radically different from any other generation that's ever existed before us, okay? So these are just two examples. We could talk about nanotechnology, we could talk about artificial intelligence, we could talk about the extension of human life expectancy increasing around the world. Remember, I have seen the bad things in the world as well. I was in Iraq, I was in Afghanistan, I served in the wars. That stuff is still going on. Battle number 1 is representative of that. It is still going on. The central banks are still debasing the currency. That's not what I'm arguing. What I'm arguing here is that there is a separate paradigm happening simultaneously, where we're talking about the need to be saving money altogether versus the need to be using that money toward growth and expansion. And this is going to be decided here within the next couple of years. And most of the early looking signals that I see at this point, although I don't want to call this definitively yet until we see either a breakout above 19.2 or a breakdown below 13.3, most of the early looking signals that I'm seeing from studying these markets is suggesting that it's going to break upward in favor of the Dow Jones Industrial Average. So can you imagine that gold is going to be winning the battle number 1 versus fiat assets, while simultaneously the Dow Jones Industrial Average, or in other words, our collective capacity as a species, is going to be increasing versus gold at the same exact time? If you've liked this broadcast, I want to welcome you to join us in Precious Metals Intelligence, where I'm offering for a limited time, it expires this Friday, July 14th, where you can have complete access to filling in all of the sum of my knowledge on the precious metals markets and related markets. Here you are seeing a snippet of that. If you are a serious precious metals investor and are going to be looking to expand your understanding, your scope of the investment horizon, whether gold peaks this year, next year, or 5 years from now, it behooves you to have as much education as possible to stay up to date on where exactly we are in the precious metals. And that is what we do in the service Precious Metals Intelligence. You get weekly videos, just like you've seen here, but much more in depth. We also cover Bitcoin, the stock market, the currencies, the rest of the commodities, gold, silver, the mining sector, the exact open market investments that we are making with the exact buy and sell signals sent to you via flash update to your email inbox. All of this is included. Remember, you can get full access for only $1 for the next 2 weeks. This offer expires this Friday. Make sure to take advantage of this. Our other service for higher net worth investors is called Elite's Private Placements. If you did not have the chance to go back make sure to watch the last video because I talk about how we have a placement open right now with a deadline of tomorrow where we have downside protection in the precious metals at the same time as we are retaining upside potential. This is what you want to start thinking about as you look at that Dow Jones to gold average and think about which way this might break over the coming 1 to 2 years. You want to keep some ability to have upside in the precious metals, but you need to start thinking about what could the downside be to be a prudent global investor. Elite private placements is where you get access to these higher leverage deals that give you free warrants in addition to the shares that we are buying in the open market. Remember, you get a free Precious Metals Intelligence subscription if you join us in the Elite service. If you would like to speak to me one-on-one about your unique situation, know that you can reach me, please, on the Consultations tab of the website. I am a 100% independent analyst. I look out for the best interest of individual subscribers. I do not take any fees or kickbacks from any of the companies that we talk about in either of these services, from none of the Bitcoin or crypto promoters, from none of the stock market promoters. I sit down with you, how we've sat down here, and we talk about your situation, and I give you, from a researched, independent perspective, what I would do if I was in your situation. Thank you for joining today. I hope you will stay well. As I said, I won't be posting very much for the next 2 weeks because I'm going to be focusing on the limited time trial and producing content for those people who choose to take up on this trial. Hope to see you there. Think about the two battles here, and let us remember, it is not only gold versus fiat assets, it is also gold versus the productive capacity of us as a species.